Welcome back to Bruin News Network. I'm Davis Fortney.
And I'm Ray Collins. Our top stories today: Bitcoin and banking. More proof that the Wolves of Wall Street are the best team in Dr. Fleming's microeconomic class. Also, is Bruiser the Bruin secretly rooting for Lipscomb?
All interesting stories, Ray, but first we have a panel of experts in the studio ready to discuss one of the recent developments in the banking world, that being the use of Bitcoin.
Bitcoin can have a higher positive impact compared to traditional banking accounts, but it comes with a high risk. Using tradeoffs, people can weigh the risk to rewards.
Tradeoffs are the decisions that we make to sacrifice one good in order to attain another. It will be interesting to see if people use Bitcoin instead of banks to store and grow their money. Some might even say it'll take a bite out of banking.
By banking in this context, we mean the specific functions they have for the majority of their customers, namely storing money and completing transactions. Bitcoin is a currency and not a traditional bank, but it does let people meet these requirements in the place of a bank. Let's now turn it over to fellow anchor Annie to introduce our distinguished panel of guests.
Thank you, Ray. Our first guest is Shay Burkhouse, an expert on the technology behind Bitcoin. Then we have Victor O'Brien, who is an optimist about the future of Bitcoin. And lastly, Ashley Sherburne, who will be explaining why some people are so concerned about this alternative. Thank you all for coming on the show today. And our first question for the viewers is, what exactly is Bitcoin?
According to Investopedia, Bitcoin is a digital currency on a macroeconomic scale that is not controlled by any banks or the government. It was created in order to send currency over the internet, and because there are no central controls, Bitcoin relies on peer-to-peer technology. The computers are constantly running code, so it's very hard to break the system.
Exactly. There's one main incentive to using Bitcoin, as it cannot be controlled centrally. And on top of that, Bitcoin rewards you for helping others, completing their transactions in the blockchain authentication system.
What are some other potential benefits of Bitcoin compared to traditional banking?
There are a lot of different benefits. For example, as long as you don't tell anyone your wallet number, all your transactions are virtually anonymous.
While anonymity might be a benefit, you can't track flow of currency. Also, you can't ignore the trade-off between privacy and security. You don't know where your money came from or what it will go towards. Without being able to track this flow of currency, if you were to lose your private key or to get hacked, all of your money would be gone in minutes and with no way to retrieve it.
Well, there are some very recent developments on this. While there currently is no way to undo sending Bitcoins, the way you can cancel a transaction with a bank, financial intermediaries are popping up around Bitcoin like Waffle Houses on empty street corners. Cryptos.com talks about a new Israeli company called Kirobo that provides a unique passcode that both buyers and sellers must provide to confirm their transactions in order completion.
But there is a fundamental lack of government regulation and guarantees. I mean, the devastating amount of bank runs before and during the Great Depression led to government guaranteeing money in bank accounts in the first place. How do we prevent something like that from happening again with Bitcoin, especially if there isn't a physical value to Bitcoin?
But some people seem to think Bitcoin has high valuation. Doesn't investing your money into Bitcoin allow you to make more money overall?
According to Stanford University, there is no guarantee of minimum valuation. Fluctuation of value causes users to have unstable currency that shifts its dollar equivalent, causing them to pay either way more or way less for an item than its value in dollars. Are we willing to risk the instability of a new and uncharted investment for the sake of anonymity and a more modern method of transaction?
While you make a great point, Allison, there is no guarantee of a minimum valuation of your money in banks either. We've been off the gold standard for quite some time now, and society has not collapsed. As more people use Bitcoin, the price is stabilized, and then it will be much easier to store your money safely.
Bitcoin is in a limited supply. You can't get it back. While the scarcity allows more opportunity for higher dollar value, there is also built-in deflation due to its limited supply of a maximum of 21 million Bitcoin, which could be a good thing or a bad thing depending on your situation.
Thank you all for coming to the show today. Let's head back to the studio with Sophie and Cannon to wrap up this segment.
Thank you, Annie. According to the principles of microeconomics, trade represents a voluntary exchange between two benefited parties. Furthermore, a trade-off represents the compromises we make when choosing between one desirable feature and another. These features that we are choosing between are often incompatible with each other. Every decision we make incurs a cost when resources are scarce, and when we analyze these costs and determine which ones are more or less profitable to us, we are contemplating and weighing the trade-offs.
We have talked your ear off about Bitcoin, but let's do a quick summary of what Bitcoin actually is. Bitcoin is an online currency which is exchanged through virtual transactions is a cryptocurrency used for trading and making purchases online without the use of a centralized authority.
Gannon, could you tell us a little bit about how trade-offs relate to the pros and cons of Bitcoin?
Sure. So if I may sum up your arguments, using Bitcoin instead of traditional banking methods of saving and investing, you gain privacy in your purchase, lower inflation risk, and have a large potential for monetary growth. But in return, you must risk a lack of government regulation, changing valuation, and an increased need for technological security.
Thanks from y'all in the studio. Bitcoin certainly has its advantages and disadvantages, as with every decision in economics and in life. It seems that whether more people use it or not, Bitcoin and certainly blockchain technology will be sticking around for quite some time. Ultimately, it will be up to the people to decide whether Bitcoin becomes the next big thing. Ask your financial advisor if diversifying into Bitcoin is a good idea for your situation today. That's all from now. Thanks for tuning in to Bruin News Network.